part 6 of the mysmp.com Elliot Wave Introduction course, we're going to be talking about the third wave extension. Now, the third wave extension is the most common impulsive wave type. When you look at many websites or books, you'll notice that they have an ideal or, you know, a perfect path of the impulsive wave structure. And you'll notice that the third wave is generally the wave that's extended. This is because the third wave impulsive formation is the strongest. So, in terms of relationship between wave 3 and wave 1 and wave 3 and wave 5, these rules really don't apply because this wave really has no boundaries. So it's extremely powerful. Um, the wave 3, it must be greater than 161.8% of wave 1. That's really the only real hard requirement, if you will. Um, and wave 3, of course, has to be the longest wave in this formation, but there aren't really many rules in terms of how the waves should relate to each other. They may give you clues if wave 2 retraces more than 61.8% of wave 1, that ultimately wave 5 will be a failure wave. And if wave 4 retraces more than 38.2% of wave 3, then odds are wave 5 will be a terminal wave. But there's no way of really saying, oh, well, at this point wave 3 should stop because it's just that impulsive. So if you're looking to jump on a trend or get off of a trend, if you notice that the counter move is starting for wave 3, this is really the importance of it. You just need to be able to identify a wave 3 extension because it is the most powerful formation of all. Alright, so how do you identify a wave 3 extension? With all that said, I know it's pretty vague, the simplest way to identify a wave 3 extension is to draw a simple channel. Now in this channel, the wave 3 at some point should come out of the resistance area, or support if you're in a bear market. So it may not completely blow it out, but you should see some sort of penetration. And of course, wave 3 in relation to wave 1 should be much larger. And you'll be able to identify that as you see the formation play out. But no matter how many touch points are used to draw the trend lines, there should be a parallel trend line or channel drawn. You see a lot of technicians or Elliottians draw these wedge formations, diamond formations, and while these may be applicable to other trading styles, within the wave 3 extension, you want to just keep it simple and have a channel, and you should be able to see the third wave come out of that channel at some point. Now, let's talk about a real life example of a wave 3 extension. Here we have the Dow Jones, and I hope I'm not causing too much headache or pain for someone going through this course, but I think it's important to see the power of a wave 3 extension. I think the clearest example of that is the recent decline. So if you notice here, wave 1, we started up near 14,200, and we dropped down to roughly 11,634, which is 2,500 points. We had a nice recovery rally, which brought us up to 13,136, and this actually kind of, it went past the 38.2% retracement. So, there may have been some folks out there saying, hey, it was a pretty deep retracement, but if you remember, one of the soft rules, if you will, is that wave 2 should not retrace any more than 61.8% of wave 1. And if you look here, we did 58.59%. So while that retracement of wave 1 was pretty solid, it still fell within the parameters of a potential wave 3 collapse for the market. Now, there's no way of really knowing that the market is going to have this type of move. I mean, these only come once a generation, maybe once every 2 generations. So within the broad markets, but you will be able to identify these types of setups in some securities as different industries go through their regular business cycles. All right, so wave 3 was 5,363 points, basically, straight down. Now, you see here, you see wave 3 here. As we draw a parallel channel, was able to get out the bottom of this, and only did it for a couple of days, but we were able to hit 77.73 on the Dow, which caused that reactionary pop. Now, this retracement shot the Dow up 37.67% of wave 3. So, it was a pretty decent run. But again, we didn't do 38.2% of Wave 3, so it's still within the parameters of a Wave 3 extension. So, looking back at our previous slides, if you remember, whenever you have this Wave 5 could be either a one-to-one relationship to Wave 1, or it could be 61.8 or 161.8. So it could be any of the three. Now, since the market, the pullbacks fit within the range of retracement of a Wave 3 extension, odds are you're going to have a one-to-one or a 1.618% of Wave 1. So right now the market is still kind of in this process of finding the Wave 5 bottom. But right now, based on that analysis, we know that the bottom should come anywhere between 56.46 and 72.31. So I know you're thinking, well, that's a big range. What's that going to do for me? Well, exactly, it is a very big range. And again, this course is not meant to necessarily tell a person, hey, get at this exact point. The course is here to tell you, or rather advise you on when to go cash, when to protect your money. So don't try to go out and time a Wave 3 extension. It's going to be extremely hard, and for every one you find, there are going to be 20 that don't turn out that way. But most important is to be able to understand when you're in a Wave 3 extension. So people that would have bought this pullback at 97.94, right, on the Wave 4 pullback, had you known the wave structure and understand that this is potentially a Wave 3, you would have held off and waited for that reaction to come in to say, you know what, it's probably best for me to wait until, low 7,000, maybe 6,000 range, somewhere in there before I jump on this bus. And you could have saved a considerable amount of money.